Good evening. Welcome back to Unit 5. We're working on merchandise pricing and payroll. Today we are doing the last section in Unit 5. This is the payroll section. I'm going to move this down a little bit, see if that makes it any better. All right, so the payroll section is in your textbook. It is Chapter 9. We are only doing Section 1. We are not going to look at any of the other parts of Chapter 9, as we're going to leave those for a payroll course that the business division offers. All right. So, some of the basic payroll goals that we want you to know. The first is we want you to be able to calculate pay based on the different pay structures and pay periods, such as weekly, biweekly, monthly, and semi-monthly. Along with that, we want you to be able to switch between those different pay periods and calculate your salary based on weekly, based on biweekly, based on monthly, based on semi-monthly. We want you to be able to calculate pay for hourly wages. That is your regular wage pay along with what may be known as overtime pay, time and a half, or holiday pay, which is often double time. We're going to talk a little bit about piecework. Piecework is not as popular in this area, but piecework is a valid pay structure. There are two different types we're going to talk about. The first is straight piecework, and the second is known as differential piecework. And then lastly, we're going to talk about pay based on commissions. There are two types of commissions to look at. One will be a straight commission, and the second will be an incremental commission. Along with that, we're going to talk about what happens when you take a draw based on your pay. All right, so your pay periods. Not all pay periods are the same. Not every business has the same pay period or pay structure. The pay period is determined by the number of times per year you receive a paycheck. The first is a weekly paycheck. This is 52 times in a year. It is the most popular by far and away with employees. They would prefer to have a weekly paycheck. Usually that paycheck comes on Fridays. However, for a business, this is often cost prohibitive. However, in some pay structures, in some businesses, this is the most common pay structure, such as retail. One of those businesses would be retail. And oftentimes we find in trade work, construction work, plumbing, electrical, those can also be weekly paychecks. Bi-weekly is when you get a paycheck every other week. There are 26 of these in a year. It normally occurs every other Friday. In this particular situation, overtime is much easier to calculate. However, if you are receiving a full-time benefit, those are more difficult to calculate. It's worth noting that in some years, there will actually be 27 paychecks in a year, bonus. However, that particular situation brings up all different types of complexities for the business owner. Semi-monthly is a pay structure where you receive 2 paychecks a month. This is 24 a year, or 2 times 12. Those paychecks generally occur on the 1st and the 15th, or on the 15th and the 30th. This is most convenient for businesses because the reports in a business are generally run monthly. And so if you run your paychecks by the month, it makes the reports easier. However, because you are getting paid by the dates, such as the 15th and the 30th, that could mean that you get paid midweek. And so work weeks and pay cycles in an hourly situation are often at a disadvantage. Lastly, and the most infrequently used, is a monthly paycheck. A monthly paycheck means you get 12 paychecks in a month. You are paid at the end, usually, of the month. It is the most cost-effective pay structure for employers. However, it is very difficult for an employee to manage. I know in my first career job as a teacher, I got paid on a monthly basis. That made things incredibly difficult, as all of my bills had to be paid at one time, leaving me with maybe some months $200 to budget through the next 30 days. It was not my favorite way to get paid. I made it, but it is not my favorite way to get paid. It can also be difficult with holidays, because if you're only getting one paycheck, that means that your boss, your business has to figure out what to do when there's a bank holiday or whatever, and you were supposed to get paid on that day. The preference is usually to pay early, which means as a business owner, you would have to come up with the funds earlier than maybe you were expecting. So there are complications there. There's additional information on the different pay structures at the link below, www.paycor.com Resource Center, or you can simply Google 10 things to know about pay periods. All right, a problem to try. A Shutterfly production shift manager earns a gross annual salary of $70,778, and we're going to calculate his weekly, biweekly, semi-monthly, and monthly paychecks for this particular employee. So what would each situation bring in terms of a paycheck? If the shift manager was getting a weekly paycheck, we would take what's known as the gross annual salary. Gross annual salary simply means the money he's supposed to make in a year. It's no deductions. We're not going to take out taxes. We're not going to take out money for benefits. We're not taking out any of those. It's just his gross pay. All right, that's the total amount that he's getting paid. And for a weekly paycheck, we're going to divide that by 52. So 70,778 divided by 52 works out to be $1,361.12. Notice we have rounded up the 115 to 12 cents. These are dollars and cents. We do use 2 decimal places. Biweekly is the second option. This is every other week. It is not quite as simple as to multiply the weekly by 2. That can work, but it can also be off slightly. What we do instead is we take the gross annual salary and we divide it by 26, or $70,778 divided by 26, which gets us $2,622.23. Notice how that's not the 24 we might have assumed. It is slightly off because of the decimal pennies that would be hanging off the end there. Semi-monthly is our third option. Semi-monthly is 2 times a month. And since there are 12 months in a year, we will take the gross annual salary and divide it by 24. So 7,778 divided by 24 is $2,949.08. Now, the last one is monthly. You can already kind of tell that's going to be a large amount, but we're going to take the gross annual salary of $70,778 and divide it by 12 this time because there are 12 months in a year, and that's going to give us $5,898.17. So we have calculated what the possible gross paychecks would be for a weekly paycheck, a bi-weekly paycheck, a semi-monthly paycheck, and a monthly paycheck. Our second objective here is we want you to be able to switch between different pay periods. So in this example, Megan works at an advertising firm as a graphic designer. Her current gross pay is $2,075 bi-weekly. This is a fairly average pay. I did Google it before I put it in here. Her company is converting their payroll to semi-monthly. So they're moving from bi-weekly to semi-monthly. We need to determine 2 things. We're going to determine her annual gross salary. So how much is she making a year? And what would happen if they switch to a semi-monthly paycheck? So to start with, we'll look at her annual salary. She's currently receiving a bi-weekly paycheck of $2,075. Remember, her bi-weekly paycheck is 26. So 26 paychecks in a year. So we're going to take her bi-weekly amount, which is $2,075, and multiply that by 26. That gives us $53,950 as her annual gross salary. So her gross annual pay is $53,950. If her boss or business decides to switch to semi-monthly, that means she's not going to be getting 26 paychecks anymore. She's actually going to be getting 24. but they still have to pay her the same annual amount. They can't just cut 2 checks out of her life and have them go unaccounted for. So that means that her boss needs to take the $53,950 and split it 24 ways instead of 26. This should put more money into each paycheck. She gets fewer, but she gets more money in each. So we're going to take the $53,950 and divide it by 24. That gives us $2,247.92. And she's going to get that twice a month. Again, usually on the 15th and the 30th, or the 1st and the 15th. All right. We also want you to be able to calculate your hourly wages. To do that, it's a simple multiplication for regular pay. For regular pay, we're simply going to take whatever hourly rate you're given and multiply that by the number of hours you worked. That will give you your regular pay. Time and a half and double time are overtime and holiday pay. And whether you get double time for holidays or 1.5 time and a half is entirely up to your employer, right? I've worked for employers that don't give holiday pay at all, and I work for employers that do give holiday pay. Overtime is something that you should get, and again, overtime is an additional pay for hours worked above the standard work week or the standard pay period. In both cases, your total gross pay is whatever your regular pay was, plus any overtime or additional pay, overtime or holiday. That should be overtime/holiday in there. It is worth noting that the regular hours by pay period are as follows. A weekly pay period is 40 hours. Anything above 40 is considered overtime. A biweekly pay period is 80 hours. Anything above 80 hours is considered overtime. Semi-monthly is twice a month or 86.67 hours per pay period. And monthly is 173.33 hours per pay period. Now, I'm not as familiar with the laws in every state, not even really with the laws in the state of Wisconsin, but do be careful, because if you are on a bi-weekly paycheck, that is every other week, and you work, let's say 45 hours in the first week and 20 hours in the second, in your pay period, that's a total of 65 hours. That doesn't meet the threshold of 80 hours for overtime pay. Now, I know most of the time we think anything over 40 is overtime, but it can depend upon your pay period and your boss, the way your business, the way your employer has things structured. Okay, just be aware. All right, so here's a problem. We have Sam earning $25.42 as a supervisor at a plant. Her overtime rate is 1.5. Her holiday rate is double time what her gross, and her holiday rate is double time. What is Sam's gross pay if she worked 52 hours last week, including 8 hours of holiday pay? So her regular pay is her hourly rate times her regular hours. We know her hourly rate is $25.42 or $25.42. We know that she worked 52 hours. Of those 52, 40 of them would be considered regular. She's on a weekly pay, so 40 would be considered regular. So she'll get $1,016.80 in regular pay. So we've accounted for those 40 hours, and we can subtract them from the 52, leaving us with 12 hours unaccounted for, unpaid to Sam yet. We know that Sam received holiday pay, and we know that she got 8 hours of holiday pay. So we're going to take the hourly rate of $25.42. Her holiday pay is double or 2 times. That's her pay factor there. And then 8 hours or the number of hours she worked holiday pay. So if I do that, I have to take those 8 hours off the 12 remaining, leaving me with 4. And I can see that $25.42 times 2 times 8 is $406.72. We still have 4 hours unaccounted for. Those 4 hours are between the regular, but they're not holiday. So they fall into simply overtime pay. Overtime pay is the same basic structure as holiday, only our pay factor is changing here. Our hourly rate is still $25.42. Our pay factor now is 1.5. The hours worked at that rate are 4. So I can now account for those 4. I have 0 hours left to account for, and I know that that overtime pay, $25.42 times 1.5 times 4, is $152.52. So Sam, altogether, her gross pay is her regular pay plus any additional monies she received for overtime and holiday. So we're going to take the $1,016.80, add it to the $406.72, and add that to $152.52. This gives us a total of $1,576.04. All right. 2 more types of payroll that we want to look at. The first is that of piecework. Piecework is a type of pay where an employee is paid a fixed amount for each item that they are able to complete. So this area doesn't have a lot of piecework. I understand that there are a couple. There is a screen printer that uses piecework pay, and I have been told that some lines at Ashley Furniture, at least at one point, used a piecework pay. In other words, you got a base rate and then you got additional monies for every sofa you were able to get through the production line. All right. Piecework has sort of some pros and some cons. For employers, one of the pros is that it encourages their staff to produce more, to work harder, to get more done. It's used as a motivational factor. However, with that comes a con, and that is that their employees may work really hard but not care what kind of quality they're putting out. So there's a balance to be done with piecework. All right. We're going to talk about the way you calculate piecework. Now, if it's straight piecework, it's just a simple multiplication plan again. You take the amount of money you get per piece and you multiply that by the number of pieces completed. So if I get 5 cents for each additional banner I put together and I make 200 banners on my shift, then I get 5 times 200, which is an extra $10 in my paycheck. Okay? Straight multiplication. There's also something called differential piecework, and this is when additional pieces are worth more as an incentive. So if you complete 200, there may be 5 cents a piece. But if you complete something over 200, maybe it's 7 cents a piece. And what's difficult about that is you have to figure out the amount for each category. It's not just, okay, they're going to give me 7 cents for each piece over 200. So if I've done 300 pieces, it's 300 times 7 cents. Nope. I still only get 5 cents for the first 200. Everybody gets 5 cents for the first 200. So that means that once I have those 200 done, if I did 300, I only get 7 cents on the next 300. So I have to keep subtracting off, much like we kind of did with the different overtime hours, right? So there's a formula for this, but it's easier to just kind of use the table. So I'm going to go through how to use the table in order to get you some clarity. It is also worth noting that piecework is often used as an incentivizing piece. So there is often a base pay. So oftentimes there is some sort of base pay or regular pay, and then the piecework is incentivized on top of it. So I've got a couple of examples here. The first one is that of straight piecework. So we have ChemLab paying its workers $290 a week plus 1.8 cents per unit of production. The average worker, it says, can produce 13,522 units in a week. And if that's the case, what would their weekly gross pay be? So their weekly gross pay would be whatever their regular pay is plus their piecework. So to calculate their piecework pay, We need to know the number of pieces they completed, and we want to multiply that by the rate per piece. In this case, it's pretty straightforward. We know they were able to complete 13,522 pieces, and we know they got 0.018 cents or 0.018 of a dollar per piece, so 1.8 cents. If we multiply those out, we get $243.396. Rounding that to the nearest hundredth, because it's money, that would be $243.40. When we add that to their base pay of $290, so $290 plus that $243.40, we get $533.40. So their weekly gross pay would be $533.40. It's worth noting that this is over minimum wage, or over a minimum of $7.25 for 40 hours. So they're in the clear. If there's a difference in their piecework, their employer may have to make that up. Like if they come up short because they weren't able to produce as much. But if that's the case, they're likely not going to keep a job there for very long. Sorry. All right. Second type of piecework is known as differential. So here we have an example of differential piecework. I've named the production company Do It Fast. Do It Fast pays its production $400 a week, plus 5 cents a unit for the first 500 units they produce, 7 cents for the 501st to 750 units, and 11 cents each for 751 or more units. Karen knows she can produce 1,250 units per week, so what's her gross pay? For her gross pay, we need her regular pay plus her piecework. In order to find her piecework pay, I'm going to use this table. And this table brings out the 3 categories. The first category is 500 or less, for which she gets 5 cents a piece. The second category is 501 pieces to 750 pieces, for which she gets 7 cents, each one of those. The 501st piece to the 750th piece. And then she gets 11 cents each for the 751st piece and anyone after, okay? Once we add these categories together, we will have her total piecework pay. So here's where we're going to start. She's got 1,250 pieces that she completes on average, or that week. Her first 500, so I'm going to count for her first 500, she gets 5 cents a piece. She's on the 5 cent tier with the first 500. So we're going to do 500 times 5 cents, which gives her $25 additional for those first 500. Now, she made up more than that. There are still 750 pieces left to be paid for. So the next 250 pieces are on the 7 cent tier, right? So she's going to fill all of those on the 7 cent tier. So if we do 250 times 7 cents, that's $17.50. So she's going to get an additional $17.50 for filling up the second tier. Her third tier, because there are still 500 pieces remaining to be paid for. So her third tier will be those 500 pieces at the 11 cent tier. So we do 500 times 11, and she's going to get $55 for everything that's up there. That means her total piecework pay is the sum of all those categories, 25, 17.50, and 55. This gives her piecework pay of $97.50. So her regular pay was $400. Her piecework pay is $97.50. So she's going to get a total gross paycheck of $497.50. Perfect. Okay. Our last is commissions. Now, we have done some commissions when we did the percent unit, but we're going to take a little bit of a longer look at them here. Commissions are additional compensations that are earned based on your job performance. Usually, when you sign on to a job, you know it's commission, and you agree to be paid a percentage of a goal that the company sets for you. That goal is usually based on three things. One of three things. Sorry, not all three at once. Usually it's based on your total sales. So my understanding is if you work at the Buckle get a commission based on their total sales. So if you're a girl working at the Buckle and you sell $400 to a customer, $400 worth of clothes, you might get 2% of that. So you might get an additional $8 in your paycheck that day. Okay. The second type of commission might be on the number of deals closed. So if you work as a salesperson for a distributor and maybe you go to different stores and you barter sales deals with them. So maybe you come in and you barter with Festival Foods to provide them with, I don't know, a certain kind of soup. Right? So then whatever that they agree to purchase from your business, from your employer, you get a certain percentage of that. If you are a recruiter, if you're an HR and you're a recruiter, you can get a percentage of the pay for headhunting. So if I'm working for a recruiting firm and I go out and find somebody to be a CEO, a CFO, a chief financial officer, and that CFO gets, I don't know, $360,000 a year, I might get a commission based on finding that person for you. Like I might get 10% of that. I might get a $36,000 payday just for doing, I don't know what recruiters get. I'm making up money. All right. So in retail, you usually get commissions on the percentage of the sales. That would be the Buckle example. If you are the regional director of something, that might be the percentage of business brought in, such as the one where you're a distributor. If you are a recruiter, that is often based on the percentage of the hiring salary. Now, there are a couple of others. If you work real estate, you might get a percent of the home cost. If you work insurance, you might get a percentage of the insurance policy that you sold. So there are many other types. These are just four that I could come up with right away. All right. What are the advantages? Again, your pay is tied to your effort, and it helps a business manage their payroll expenses. If you didn't try real hard, I don't have to pay you a whole lot. There are some disadvantages. It can have an effect on team dynamics. If you can cause some jealousy and some envy and some competition for better districts and better areas. It does cause people to focus on just the money again and not about the whole experience. Okay, so the types of commissions. The first type of commission we're going to look at is a straight commission. The second is known as incremental. The third is if you're dealing with a situation where you have salary plus commission, much like we did with Piecework. And the last piece is explaining what a draw is. So straight commission is just your commission rate times your total sales. That's where your total gross pay is just your commission rate times the sales. Incremental is again like the differential piecework. There are steps, and as you complete each step, the commission rate increases. Each level, the percentage of the commission will increase, but it doesn't apply to all of your total sales. It only applies to that tier. Salary plus commission is where you basically promise a base salary and additional commissions. Your commission, again, is going to be the commission rate times whatever sales it's based on. Right? The last piece is a draw. What is a draw? A draw is basically a loan. Your boss agrees to prepay you out of what you may make in future commissions. It's basically a little mini loan against any future pay you might get. Now, most of the time, you cannot do this day one. As an employee, you can't get hired on at a car lot and day two go in and ask for a draw. They're not going to do that. My understanding is that if your business, if your employer offers a draw, you usually have some history with that particular company, and they often do it based on your average. So if your average sales are $100,000 and you get a 5% commission, that would be $5,000. So your draw would never be more than $5,000, and it would likely be a percent of that. Like maybe you can take 40% or 10% of your average commission over a rolling sort of total. So it's not like open season on borrowing money from your employer. Okay. All right. So here's an example of a straight commission. A realtor receives a 2.4% commission on every home sale. If the realtor sells a $279,000 home, what amount of money does she make in the commission? Now, your commission is just your commission rate times your total sales. Most of the time, realtors work on straight commission. So we would take the 2.4% and move the decimal point over to make it a rate. So 0.024 times the total sale of the house, which is $279,000, to give this realtor a commission of $6,696. So on one house sale, she made $6,696. Now, it should be noted that that home sale could have taken 3 months and countless hours to get done. This is not something that happens every day when you work in realty. All right. Incremental commission. A salesperson at Slumber King receives a monthly salary of $1,500 plus a 1% commission on the first $12,000 in sales, 2% on the next $12,000, and 4% on all sales thereafter. If the salesperson sells $30,400 in a month, what would their gross take-home pay be? Now, their gross pay, remember, would be the salary plus the commission. And the commission in this case is incremental, meaning there are different tiers. So we want to take the commission rate times the sales at that rate for each one of these tiers. The easiest way for me to do this is to create a little chart. In the chart, the percent commission on the first tier is 1%, and that's from $1 to $12,000. The second tier is a 2% commission, and that's from $12,001 to $24,000, or the next $12,000. Tier number 3 is a 4% commission on anything over $24,000. So it should really say $24,001. Can I get the 1 in there? Let me add the 1. Ching. 1. Okay, I'll fix that before I post. All right, so $30,400 is the starting sales. We're going to take the first $12,000 off of there, and we're going to figure out the commission on that first $12,000. That's the 1% tier, so we're going to do 12,000 times 0.01 for $120. This leaves $18,400 left for the salesperson to earn commissions on. So the next tier is $12,000. So we're going to fill that next tier. So we'll have $12,000 at the 2% tier. 12,000 times 2% is $240. This leaves us $6,400 remaining for the third tier. All $6,400 will happen at the 4% tier, or $256. Our total commission is the sum of each one of these tiers, or $616. Gross pay is the salary of $1,500 for the month, plus the $616 in commission, or $2,116. Ta-da! All right. We're going to use the gross pay to figure out sales. So we're going to backtrack this one. Steve makes a weekly salary of $1,000 plus a 0.17% commission on every life insurance policy he sells. If Steve's gross pay last week was $1,850, what were his sales in the life insurance? So we're going to start with total gross pay is the salary plus commission. We know the gross pay was $1,850, and we know the salary was $1,000. We're going to find the commission. So gross pay is salary plus commission. We've got the gross pay of $1,850 and the salary of $1,000. I'm going to take that $1,000 off of both sides, and that tells me that $850 had to be the commission. How do we find commission? Commission is the commission rate times the total sales. So $850 has to be our commission rate times the total sales. $850, commission rate is 0.17% times the total sales. Now here's this part will catch some people. This is 0.17%, so they get less than 1% in commission. I still need to move my decimal point over 2 places, or if you'd rather, we still need to divide by 100. So this is going to be 850 is equal to 0.0017 times whatever the sales were. In order to calculate the sales, I need to divide both sides by 0.0017, and that will give me my total sales. On my calculator, I type this in, and I get 500,000 is the total sales. So in order to get $850 in commission, Steve had to sell $500,000 worth of insurance. All right. Our last piece is the idea of a draw. And once again, a draw is a loan on future commissions. So you have to pay a drawback. Kevin works for a sales company that pays 4% in commission and allows for a $1,000 draw each month. If Kevin takes the draw and then sells $40,000 worth of goods, how much commission is he owed this month? So commission, if you recall, is the commission rate times your total sales. So our commission is going to be our commission rate of 4% times the total sales of $40,000. Sorry, puppy's moving. So if I do 4% as a decimal, that's 0.04 times $40,000 is $1,600. Kevin earned a commission of $1,600, but the draw still has to be paid back to his employer. And he took a draw of $1,000. So if I take $1,600 and I subtract the $1,000 draw, this means that Kevin is only owed $600. So Kevin is going to be owed $600. Right? That was our last example. So now we want to check and make sure you feel confident doing the following. Do you feel like you could calculate pay based on different pay periods? If it was a weekly check, a bi-weekly check, a monthly or semi-monthly check? And do you feel fairly confident converting between those different pay periods? Can you calculate pay based on hourly wages? This includes regular pay, overtime, holiday, time and a half, or double time. Do you feel like you can calculate piecework pay? That is straight piecework or differential. And how do you feel about the commission stuff? Do you feel like you could calculate straight commission or incremental commission? Are you confident enough with what a draw is and how to work with one? Right? There are practice problems in your e-text. This is Chapter 9, Section 1. The review exercises are at the end of this section. You could do problems 1 through 28 on these. That extra practice, if you have a physical copy of the textbook, is page 270 to 273. You will find a graded assignment on WebAssign. Again, it is a creative title, Chapter 9, Section 1. As always, if you have any questions, please don't hesitate to contact your instructor. Reach out to your support personnel, to the Math Center, or to any other tutors that you have available to you. Thank you.